Hi, this is Lara at Elliott Wave Stock Market with a free DJIA Elliott Wave analysis for you for the week ending Friday the 27th of August. Starting out, because I haven't done the Dow for a while, starting out with a look at an historical chart going back to the early 70s. First, we have to assume, and we know for sure, that price prior to the early 70s was significantly lower. I'm really happy with seeing this very long sustained rise with increased momentum towards the end of a 5-wave impulsive structure. So I'm pretty happy with this cycle degree wave 5 up here. Thereafter, this downwards piece of movement has a corrective wave count. I'm going to label this A at cycle degree. Thereafter, a B wave that ends quite a chunk beyond the end of A, so we're looking at either an expanding triangle or a flat correction, either a running flat or an expanded flat. Thereafter, we've got either a C wave or the start of a C wave that ends beyond the end of A, so we're still looking at either possibly an expanding triangle, and we can rule out a running flat and most likely an expanded flat correction. This wave A at cycle degree lasted a Fibonacci 3 years. This wave B at cycle degree is a 154% correction of A, which was a little bit more than usual for an expanded flat correction, but well within allowable limits, and it lasted a Fibonacci 5 years. This primary, what I have labelled here as primary 1, is a brief 18 months. It's just over a year. I think this is far too brief to be cycle degree wave C down in its entirety. It has reached just a fair bit beyond 1.618, the length of A, but because wave B travelled so much higher than the past the start of A, I would expect it's entirely possible for the C wave at cycle degree to reach 2.618, the length of A. When your target for C is calculated as 1.618, the length of A is breached and price keeps moving down and needs further to go down to complete a satisfactory 5-wave structure for wave C, then the next target calculated, and this is technically correct, would be 2.618, the length of A. This is entirely possible and well within allowable limits for an expanded flat correction, which is what I think this is. I'm really happy with the idea that this piece of movement here compared to this piece of movement here is a correction, and expanded flat corrections are very, very common. It does remain possible that we may be looking at an expanding triangle, but those structures are very rare. Also, they require 4 out of 5 subwaves to subdivide into zigzags, and this piece of downwards movement is very difficult to count as a zigzag, and that would be very flexible and elastic with rules and guidelines. It's most likely an impulse. So for that reason as well, I expect this is not an expanding triangle. It's most likely an expanded flat correction unfolding at cycle degree, which is a really common type of correction. I have a time target for the end to cycle degree wave C. As I said, the cycle degree A lasted 3 years, B lasted 5 years. If we continue the Fibonacci sequence, then C would last a Fibonacci 8 years and take us to the end of 2015. So I have a date for this target, 2,278.84 points by the end of 2015. Taking you to a monthly chart with a little bit more close-up, where this 5 is this 5 up here, and here's that corrective structure for A, corrective structure for B, that's a 154% correction of A, and working on C, a 5-wave structure to the downside. This first wave at primary degree subdivides most easily into a 5-wave structure. It's easier to see the subdivision of this third wave on a weekly chart. It has a really, really clean, obvious, impulsive look. I've published that one before. If you want to have a look, go back to my previous Dow analysis. Within cycle degree wave A, primary B is a 71% correction of A. I can find no adequate Fibonacci relationship between A and C. Within cycle degree wave B, primary B is a 26% correction of A, and again I can find no adequate Fibonacci relationship between A and C. Within both of these, A and C seem to be trying for equality and failing to do it by over 200 points. Within primary wave 1 to the downside, the relationships between these intermediate waves, I can find no adequate Fibonacci relationship between 3 and 1. But this fifth wave at intermediate degree here is just 9.91 points longer than 0.382, the length of this third wave. That's a really nice Fibonacci relationship there. Within primary wave 2, we have some really nice relationships as well. This wave Y at intermediate degree is 9.6 points shorter than equality with W. That's a really tight relationship. They're very close to equal. These two X's are also close to equal. The second is just 7.3 points longer than the first. That's really close. This Z wave, the last in this triple zigzag combination, we've got a zigzag for W, zigzag, zigzag for Y, another zigzag for X, and another zigzag for Z. This is how we label a triple zigzag combination. This Z wave is 22.65 points shorter than 0.618, the length of this Y wave. That's pretty close as well. So some really nice Fibonacci relationships in there. And the second wave at primary degree is corrected just over the 0.618 Fibonacci ratio of this first wave. So that's probably why this Z wave was a bit short. It was trying to get, the whole thing was trying to get really close to 0.618, and that's a really common turning point for second waves, a very common deep second wave correction. So according to this wave count, we're in a primary third wave to the downside for the Dow. I'm really happy that this upwards corrective structure is over, because when we look at this on a weekly chart and draw a trend channel around it, it's very obviously breached to the downside. Taking you now to a daily chart where this maroon